Hello and welcome back. Today we're talking about those two picks that we've had on January 23rd, and we'll do a little update on what happened ever since. After that, we will choose short side. Uh, the two trades chosen were long only, and we'll show you the portfolio. We'll show you the performance up to date, and then we'll choose some short stocks, hedge those out, and a couple of weeks from now we'll go back in and look at the portfolio and look at the performance of the four stocks. So let's dive right in. So one of the things that we talked about, and this is a video from January 23rd. If you like, go back and take a look at that video. January 23rd of 2026, we have chosen VSCO and Victoria's Secret, that's apparel retail sector, and NXT, which is, I forget, Nextpower Inc. They make solar components. So those would be two longs that I've chosen on January 23rd. I did not take these positions. They were simply added to the watch list, and as such, they were just being watched. But let's take a look at the performance ever since then anyway. So first, let's go into VSCO, Victoria's Secret, which is already up on the screen. And VSCO since January 23rd, as you see up here, this, what you're looking at is just my portfolio tracker. Let's make this a little bit smaller so you can see the whole thing. Of the actual, I was actually looking at Playboy over here, but let's turn this into INX, which is S&P 500. And this represents the overall price still because there's no short on this. But since January 23rd, the return is $38, 399 risked, and so that's roughly 9.5% profit on VSCO, Victoria's Secret. On the NXT side, we are looking at $63.48, and that equals 15% return on risk. So I've risked $422 and returned $63.48, and this is all in 13 days. Today's session will be about choosing the short side. Like you see, as this is just straight out of the template. When I'm adding stocks, this is always the S&P 500. What we're trying to do is replace this with a stock that's going to work well with the NXT, where we're seeing that long going up and short going down. And so we have two long stocks, Victoria's Secret and Nextpower. Let's dive right into how we go about choosing a short. And for that, I use FinWiz. I find that this is my favorite tool for choosing shorts. There's many different ways of doing it, but this is free. We've chosen the longs with this tool, and so we're going to choose the shorts as well. So we go into the screener. We go, first and foremost, I want to knock off any companies outside of United States. So I'm choosing only United States stocks. Market cap. When you're choosing a short stock, what you're trying to avoid is choose a small company that could easily be taken over, at which point in time this stock could rally, spike, or whatever you want to call it, and you could end up losing a lot of money just by choosing the wrong short. Meaning, this company was too easy to take over, and they profited from the takeover, and the stock went through the roof, and you were left holding the chicken. So first and foremost, knock off the list anything outside of the United States. Check. That's up here. We've just done that. Then we're going to knock off anything that's too small. And when I mean too small, anything below 10 billion. And so in this market cap screener, we're going to go over 10 billion. And you see that this bottom list over here, 480 pages, all of a sudden is going to get a lot smaller because we're just getting rid of all the small fries. And so let's click on that, and that list dropped to 36. I could stop right there and just look at, the different charts for the companies and choose the one that I like. But just because they're big doesn't necessarily mean that it will be everything that I'm looking for. And so I tend to go a little bit further And for fundamentals, we'll choose a negative return on equity. Not only small in the sector, but actually negative. And so this narrows it down even more, and all I get left with is 4 pages. These are like high value potential shorts. Fundamentally, they're not, you know, being sorry, profitable. They're, negative year over year. They are big and they are in the United States, and that's enough. Let's just dive right into the charts. And here you'll see a representation of all these different companies in, you know, in a visual way. You actually see what is actually happening with the stock. One of the companies that I would be interested is like this CCI Crown Castle, and it's a REIT. Obviously, real estate's been doing horribly lately, and there it is, right? Um, but let's keep on going down. I'm going to take a note of this CCI. We'll add it to our list because the price action looks pretty good to me. CCI. It did bottom out over here. You could see, and then it's climbing back up. But overall, over the last year, you can see that slide slowly going down. Is it something I would be definitely diving into? Not necessarily. In fact, we have to actually dive into the financials, look at the fundamentals, and then make our decision. This is just filtering out the stuff that looks good on paper, but then you look at the actual price action, and it doesn't match what you're trying to go for. FLUT, Flutter Entertainment. You see, this one's been on a slide down. There's a lot of volatility up and down, but overall, we're sliding, sliding, sliding. I'm going to write this one down as well, FLUT. And this is just based on the price action. I like the price action. Figma, FIG. That looks like it's going straight down. Let's write that down, FIG. I believe that's already in my portfolio, but that's a potential. I'll probably not go for that one since that is already in the portfolio. HubSpot, HUBS, that's also sliding down. Another thing that I tend to look for when choosing shorts is not only the price, not only the fundamentals and the negative return on equity. I also look for the price to be up in the hundreds or as high as possible. So if it's something that's like $15, how much further can $15 get? You can only get $15, and chances of it, turning back up and going up are fairly high. So you're looking for something that's like over $100. So it has room to run. You can hold on to it for some time, and there's still room for it to give back. So hubs would be one of them right here. I'm going to write this down. Right off the bat, I have 4 F, CCI, FLUT, FIG, and hubs. And we're going to go over all of these in detail, and I'll show you exactly what I'm looking for. First, we're just looking for those, like any noob, what they would do is go after what's in front of them on the chart. Big mistake. But when you filter the bad apples out first, and then you look at the chart, it narrows things down to what could actually work out. You see this PSQI, Paramount Skydance Corp, it's entertainment. Nice slide since October. Would I want to sell this? Not necessarily. It's only $10. There's not that much room. And then right here, you see that there was a lot of support where it bounced right back up when it reached $10. We're almost at that level here. Again, would I be interested in something that's already showed me a big volume around this area? No. I would stay away from this because there's just no room for it to run. Yes, I can get a lot of them. And so my $450 exposure would translate into 45, 44 stocks. But those would work against me a lot faster. I'd rather buy 3, 4, 5 stocks on the short side, or sorry, sell 5, 6 stocks, because that price would be at like $50, $60, and there's a lot more room for it to go down. And it's just self-explanatory. You want to give yourself the room to make some money, and $10 with this support here, no, this is a loser. I bet you this is going to bounce right back up. Moving right along. RBLX on the previous page, I have that in my portfolio already. I know that for a fact, so I'm not going to touch that. And you see, like, all these companies have really bad financials, but some of them are rallying. There's different reasons for it. There's, whatever. I'm not accusing anybody of, fudging their numbers or whatever. But when you open up their books and you look at their financial statements, their income statement, the balance sheet, the cash flow, it paints a picture for itself. And if there's a lot of data in those missing, chances are the company is not somebody you should be putting your money on. And there's a lot of scams out there. And somehow they're listed online and they're just taking people's money, and because they're registered in a different country, these people are not held liable for it for a period of time, and eventually they end up in jail playing tennis. Team Altasian Corporation. Look at this. This is also in my portfolio, of course. Like, I see this type of action, and I also take it. Like, we'll go through the long and short, and you'll notice that team is actually there. It's one of the ones here, CIN and team on the short side. So that one is actually returning 38, and it's 1 month old. It's 32 days old, and it's already returning almost 40%. Like, this is the tracker. But let's go back to our screener and keep on choosing the short side stocks. Zscaler. I don't know. I have 4. I have CCI, I have FLUT, I have FIG, and I have Hubs. Since I do have FIG already in the portfolio, let's see if I have any of the other ones. Hubs is not here. CCI is up there, so we're going to scrap CCI. That's already in the portfolio. I don't want to add the same thing. FLUT, that's also in a portfolio. See, like, I've chosen some pretty good stocks there. Hubs is the only one that's not here. So we have to choose one more either way, something that's not in the portfolio. Because I don't want to choose something that, I want to choose a new stock that we haven't seen before. I don't want to just choose something because it looks great. If it's already there, what's the point? So let's choose something that could potentially return. I'm going to go look one more time through this. FLUT, we have that. Figma, we have that. Hubs, it's the only one left. INSM, biotechnology. As impressive and as attractive as some bio and pharma stocks may look, as a rule of thumb, because of the volatility and just the sheer volatility in these things, when they announce something is incredible, I stay away. I don't really touch them with a 10-foot pole. Sometimes I do, but it's not really a thing I do with this. Heinz, I already have those guys. It's not easy finding the right shorts. MSTR, Strategy Inc. Look at that. I like that price action with a lot of room to run. So MSTR, Strategy Inc. They just announced their earnings. And it looks like it was a bad one. Yeah, surprised on the downside, a lot less than it was supposed to be. So this is MSTR. Happens to be a very good one so far. And I'll go back to Seeking Alpha where I have a little bit more data on it, and we'll devise that. So we have Hubs and we have MSTR. You can get all of this data right here, MSTR. And let's maybe just use FinWiz so we don't confuse people. Let's look at some of their numbers. The latest news over here. But I am just interested in their income. Just by looking at this. Like, yes, okay, this requires subscription and whatnot. But just looking, this is working backwards. So second quarter, third quarter, fourth quarter, look at these numbers going down negative. Like, this is a huge negative here. Is this going to affect this company badly in the future? 100%. They publish EBITDA over here. Proposed sale. This is the insider trading. Once again, free information, and you can use this to make decisions. Looks like Xiao Wei Ming is liquidating his positions. He's a former officer. don't know what the story with that is, but he's liquidating quite a bit. But unless it's like a million, I don't really pay attention to this. You can find some opportunities when there's like a million shares being sold or bought. They know something. They're on the inside, and you can follow them and kind of make money that way. But yeah, not much information. Let's go MSTR. You have to actually subscribe to their service, and there are ways of getting this, and I've shown this in other videos. It's just that I've gotten comfortable over the years, and I've realized that Seeking Alpha is the best format that I found so far out there, and I just started using Seeking Alpha because of just the way it is. I call it my newspaper because I get the news, I get the analysts, I get everything about a company, anything that I could ever think of. It's all organized. So let's just dive into the financials. Thing I was on just on Finwiz right now, but without a subscription, it's not easy to see all the data. I like to deep dive on these things. So annually, let's look at their net income. And you can see it's the same story, like negative numbers, and they're only getting worse. Then if we look at quarterly, trailing 12 months by quarter, this actually shows you more of the momentum, what's actually happening. And so even though there was a spike up where they made 7.9 billion, now they're losing 38.48 last quarter. That's a big hit. That is a big hit. And so yeah, MSTR looks pretty good. Profitability, return on common equity is a negative. If we look at some earnings, they missed by 21. That's pretty big. Earnings revisions. Some people are revising it up. Yeah, okay. Earnings surprise. I don't know. You see it for yourself. Like it's a huge surprise, and I don't know. Annual, quarterly, these numbers, too negative. So yes, it's a good short. I could always change it. The price is at $134, $450 roughly what I want to be risking on this. I'll sell 3 of these. And so let's say we sell them at 134.93. These are only hypothetical trades. I'm not actually taking these trades. I'm just showing you how to choose longs and shorts. My portfolio is currently full. I choose 15 long, 15 short. There's no more room. There's only so much money, and I'm, like 90% exposed over here. So there's no room for me to include this. But for the sake of argument and to teach you a little bit about hedging, we've taken those long positions 2 weeks ago. Ideally, you want to take long and short at the same time, so you're hedging out any risk. But we're taking the shorts today. We're going to add them to the list. We're going to keep a couple of separate sheets, one for NXT and one for VSCO, just the same way I keep for any of the stocks currently in my portfolio. It's the same thing, absolutely the same thing. And then it's a summary of everything in here. So we're going to go to NXT, and we will add, instead of S&P 500, we will add MSTR. Let's see what happens. Let's reduce this to 90% so we can see this a little bit better. You can tell that the spread, once again, the one thing I keep on stressing is that it has to be this right here. It's climbing up. The price, the long being blue going up, and the red, or whatever color that is, orange, going down. And that gap is always, always, always increasing. So the price that we would have gotten is 134.93. We're going to add here today's date. This is all time-stamped. You can go back on these videos and prove me wrong if everything goes wrong, but you won't. Beta-wise, 3.6. These are both movers. These things move quite a bit. And you can see that up here. NXT on a single max daily volatility was up by $57.98. On the other side, MSTR, the Strategy Inc., 22.93. Now, you have to look at MSTR's volatility on the downside, minus $30, where NXT's is minus 9. So this one's heavier to the up, and this one's heavier to the down. And that's what you're looking for. The NXT, 13 days old since January 23rd. 23rd was a Friday. I took that trade on the 26th, on Monday, hypothetically speaking. Since that, it's 13 days old. Strategy Inc. Let's actually just we'll add it for Monday because that will be the price opening on Monday. And then that's it. Now we're tracking it, and hypothetically speaking, we just took this trade in the portfolio and we're waiting. And this is how old it is. This is the day it was taken. All the data 63.48 because NXT had a couple of weeks. This is it. And then when we come back to this video, I'll show you what the total risk return is on both these trades. And doing it this way hedges out any market volatility. When you do it this way, the volatility on down days like it has been for the last few days because of the gold, the new Fed chairman being announced and whatnot, the dollar debasement. When this type of stuff happens, there's a lot of volatility, and hedging out risk with taking shorts is a great way of reducing harm. And if you notice that over here, long and short portfolio, over the last week, this is every single day's returns. We were up to 6,300. Sorry, let's just look at the total number here. Floating and closed point loss together. So if we started off Monday with $8,500, on Tuesday I was up 1,100. On Wednesday I was down 1,200. On Thursday I was down another 1,200. And then on Friday I'm up like 1,700 and I'm back up to $9,000 again. Very volatile week. There was a tech sell-off. Microsoft reported, and there was a new India deal which pushed on Monday. But on Monday, when everything crashed and everything was low, I bought more. Remember last week I was saying I don't know what I'm going to do yet, but if we have such a pullback and there's no fundamentals showing that we're crashing, might as well expose yourself a little bit more and buy more. And so I did. I bought 4 more CDE, which is gold exposure, King Cross Corporation, more. I sold more Roblox just to balance the portfolio a little bit, bought more GRAL, bought 35 more VFF, and then I sold 4 more IP, sold more Flute, bought more Barrick Gold, and yeah, a lot of shuffling around, but I bought more gold because gold was down. And when everybody's panicking, those are the opportunity days. You don't necessarily have to go for, using using risk. You don't have to overexpose yourself. You can just buy stocks and sit on them. And when they go down, you still got them in your portfolio. If you use options, you might be wiped out already. The volatility still continued into Friday. Is it going to continue into the next week? Perhaps it could continue for another 2, but underneath it all, it doesn't show that there's going to be any issues. And there are mixed emotions on this, but let's go back into NXT MSTR. And as long as you're hedging, you're taking out that risk anyways, or at least making it a lot smaller. And sure, when the VIX goes up, you're supposed to reduce your portfolio exposure by about 50%. You call me greedy. I didn't do it this way. I'm fully in, and yeah, not biting nails. It's all part of the game. But the more hedged you are, the safer you are. And if you notice the account values, this long short is the hedged account, and this is the long only account. Just look at the difference in numbers on return wise. Let's say we've gone from 22% to 9%. Whereas this one, the high of return was 5.72. We've gone to negative 64. So by going long only, not only are you making less money, you're wiping out more because you're long only. Whereas over here, I stayed up in a profit. It's from 773 down to -6. There's a bigger return here with a lot less exposure. So if I were to go long and short with all my money, I'd be up 17.24% right now, not 4.5. But between the two, Since January 6th, I am up 6% and 6.5% or $2,097. That is overall between the long only and the long short. Over here, we're keeping track of long short portfolio. So you're not really looking at the long only because I'm trying to show you the best way to do this. But I also have a long only portfolio because that's a tax free, and that's the only thing I can do. I can't sell on this account, so I choose the best stocks for this and I just hold on to them for as long as they go up. Okay, so NXT is set up with MSTR. Now we need to dive into hubs, figure out if hubs is something that we might want to put money on. HUBS. Go back to Seeking Alpha, go to summary. How many of these am I going to buy? 232.58. I'll get two with my exposure being at 465 bucks. Price action, beautiful. Earnings, revisions, they beat actually. Everybody's revising it up. Price action, yeah, that's just analysts. That's just analysts. Are they profitable? Quarter. Still negative. Not to show me anything. EBITDA negative. Even though their numbers are slowly improving, they're still negative. Revenue per share is going up slowly, but not easy to choose the shorts. Profitability, that's obviously going to return on common equity is definitely negative. And then we have sector median 662, so it's below the sector. If this thing spikes, how much further is it going to go up? If it goes up to like $1,000 and I have two, I'll end up losing like 1,400 bucks. This is if it goes to $1,000. What are the chances of that? Like somebody taking over. Usually it'll go up $10, at which point in time I'll lose 20. And so to hedge out my exposure to the long, I will definitely take a couple of these hubs. And so let's put it in there. I really like the price action on that. Hubs. And we will get 2 shares of that. Let's say 232.58. That's the current price. We're opening it on the 9th, I believe. Yeah, Monday. Minus 1 day. That's going to happen tomorrow. Currently, Victoria's Secret's producing $38, and then in a couple of weeks, maybe a week from now, I'll come back to this, and we will go back over. You see how I'm risking $465 right here on the hub side. Yeah, and we'll keep those open. VSCO, NXT. I'll just rename them here. NXT / MSTR, and then we have 2 of those, that's fine. And then VSCO, change that to hubs. Yeah, that's it. NXT, MSTR, VSCO hubs. As simple as that was, just using a couple of tools. Yes, I deep dive a little bit more with Seeking Alpha, but if you go back to the previous videos, some of them from 4 years ago, I actually show you a whole process of choosing longs and shorts using nothing but free tools. So I'm not going to go over that here because I already have a favorite tool, which is Seeking Alpha, and it has everything I could ever imagine that I need for doing this. And that's what I go back into. I don't pay for this, so I don't use it. I'm actually going to use it. I'll show you how to use it. And if you guys want to subscribe to their service, by all means, I totally recommend it. It's a great service here. And a lot of professional traders use this service, so you'd be using the same tools. The whole idea is the more you use it, the more you learn about it. And this is just the best way of looking at things. I mean, I love Seeking Alpha. Absolutely love it. Okay, so you can look at gold performance and how that's been doing. All this volatility in the materials is because of this. And this is the new Fed chairman, the policy, monetary policy changing, whatever. It just sends shockwaves. And when you have long and short portfolio, you minimize these. So the shock is not as big. The shocks are a lot bigger if you're only long or only short, and that's when you really feel it. So to wrap up the video, we're going to go over the portfolio. I always like to go over the portfolio just to see what's going on. We've gone over the week's volatility, and we're going to wrap up the week, and I'm going to start putting in new numbers. And then once again, when this week goes through, we will see, let's look at the chart over here. See, that's what's going on with the returns. That's what's been going on this week, up and down, up and down. Overall, it's still down, yes, but am I worried? Not really. Not really. And volatility continues, it will stop. So let's go through the portfolio. Like I said, Millicom International Cellular against Crown Castle CCI. This is one of the ones that I've chosen earlier as a short. We didn't end up going with it because it's already in the portfolio. So you'll notice that in 27-day, Crown Castle has returned $16. Is it anything to be writing about? Not really, but it's only 27 days, like a month, you know. Is the spread on its way up? Yeah. So all you got to do is just sit on this and wait. One is a month old, the other one is a month old, maybe a little bit shorter, but it doesn't matter as long as this pink line here is going up, meaning the difference between the two prices, one going up, the other one going down, not reversing, because that's when you want to close things down unless there's shocks like the gold shocks of the last week. Then you're expecting for it to rebound really quickly, then you don't trim exposure like I did. I actually increased. New Gold versus Baxter International. Now, because I got in somewhere up here with the New Gold, obviously I'm a negative. Normally I would shut something like this down and close it and forget about it, but since this is the gold exposure and I'm expecting for it to rebound, I decided to hold on to it. If it continues to go down, yeah, I could lose it. But is it that much? It's only $111. And they're both losing, really. So it's not a big deal. As long as you don't put all your eggs in a basket in the same basket, you're fine. I have 80 positions, and each one of them could make money or lose money. If 10 of them fall on their ass, is it going to really affect me? It's a burp, you know. Clean and replace with something new. Another trade. Village Farms International, VFF, against International Paper. Also minus $100. These things were, you know, either up or down 2 weeks ago, whatever. I'm waiting for it to turn around. Right now, price action wise, I might be shutting this down very soon because look at it. They're doing the opposite of what they're supposed to be doing. The spread. This I might be liquidating this week, actually. And if I have one position open, maybe we'll add VSCO hubs or NXT MSTR to the portfolio. I'll see what it opens on Monday. If it keeps on going, and from the price action here, it's the opposite of what I'm going for. Obviously, the spread is going down. Then I'll liquidate this, close these off, cover them, and open new positions. MSTR, like the ones we chose today. Celestica versus General Mills. Yeah, volatility as well. You know, everything's been affected. Overall, it's $5.73. Am I going to close it? It's only been a month. No, hold on to this one for now. Barrick Gold and Lineage. You can see the results on that. You know, Lineage has been open for 222 days. Barrick Gold 81. Those are the results. Overall exposure was like 1,600 bucks, 1565, 63. Hot Adobe. And there's nothing changed about these other than increased exposure. I've had a little bit of shares to some of these. But you know, these are the results for Hut and Adobe, and can go back 2 weeks, a month, whatever. When we first started showing, it's the same portfolio. You can track what's going on. BCSFLUT. That's the returns on that. One is 227 days old. The other one's 18. The price action here is beautiful. This is, I'm not even dreaming of closing this down. I like this, so leave it. SSRM, once again, the spread is increasing. Yeah, so there are a couple there that I'm, you know, definitely going to be looking into this week and seeing if I'm going to liquidate those or not. A lot of volatility, and when that happens, these things tend to, you know, show up, but we'll see. once again, hold on to this one. Obviously, it's a winner so far. KGC King Cross. I added to this one over this week. KSPI, $300 return between those two. That's not bad. Let's keep on going. CN Team, one of the shorts that I've chosen today. Once again, beautiful price action. 1 month old, and this one's already returning $260. Look at that. The long and the short. And these things just work themselves out. You just have to have enough of them and spread your money out. Definitely don't put it all in like one thing because somebody told you to. That's the stupidest thing you can do. PDLB against GoDaddy. GoDaddy obviously is the winner here, but spread is slowly increasing. Yeah, $86, 9.5% return in 51 days. Not bad. Newmont Corporation is another mining company against Figma. One of the numbers, something that we've talked about earlier that's in the portfolio. And you can see $113 and 23 on the long side and 12 days on the short side. Not bad. Grail. Grail and Zscaler, $115, 2 months against a month. Spread increasing, beautiful. Continuing, GSL Global Ship Lease against Americold Realty Trust. That's again, winner. Hold on to it. It's a little volatile. Something I might be. GSL. I might replace GSL with something else. It's 68 days old, cold. Nah, hold on to it. Hold on to it. I'll hold on to that one. I'm not going to touch this yet. Core Mining and Kraft Heinz. Both pretty old, almost half a year old. 142. That's due to the fact that the long side, Core Mining, lost a lot recently. And now the short, Kraft Heinz, is actually climbing a little bit. But judging by the spread, it looks like it's bottomed out over here. And I'm expecting for it to go up. And I'm already up 16% on this, so I will hold on to it. And that's the template for when we do new. So that's the whole portfolio. Pretty much that's it. Every week that I update, I'm going to go through quickly at the end of the video. I'm going to quickly go through these and show you exactly what's going on without changing anything. If there are any changes, it will always be in the notes over here. If I add or whatever's happening, if it's a down day, I'll try to enter some information like what happened that day, so you can see these shocks, and then back like a year from now, we can go back into this and look at what caused what, and we can both learn like how does the market react to these political and financial shocks. Very colorful here. And you can see that the spread on the last day is increasing overall. There are some pullbacks here, like the Barrick Gold, which were in pink. And because they are all gold exposure, I actually ended up buying more while they were down in the pink. Those, I call them opportunities. The ones, there's a lot of pink. There was a lot of pink this last week. Maybe I'll take some screenshots next time this happens and show you exactly where I take these opportunities. But I'll take the highest spread that the price has ever been at, and then take the current spread and subtract the current spread from the high spread, and that's the pullback from the highs. You can either use this, or I either use this to exit trades or look for opportunities in the market. When you have these political shocks, like the one that we saw to gold with the nomination of the new Fed chairman, I call that opportunity because that's not the underpinning fundamentals that are broken. It's the latest news, it's the latest hype, it's the popular thing that everybody's listening to right now. Opportunity. And when everybody's panicking, that's when you deploy capital. Anyway, enough of that. That's a 40-minute video already. Thank you very much for joining. We'll definitely be uploading a video next week so you can keep track. And if I do end up going with any one of these, the NXTR, MSTR, and VSCO hubs, they will replace one of the positions in here. not one or the other, but we will keep track of both of these no matter what. And yeah, we'll show you exactly the results. I mean, you've seen it. We did it live. Um, I didn't. I didn't have this, prefabricated or from whatever. It's February the 8th at 1:48 p.m. You can see it's all time stamped everywhere here. And I'll show you how this works. So God bless. Hope you've learned something today, and see you next week. Thank you for watching, and don't forget to subscribe. Click that like button because I like that. Bye.